Bitcoin and XRP just survived a brutal sell-off, but what happens next? Right, I'm going to be completely honest with you guys today. Crypto has just had one of those weeks that reminds people exactly how volatile this market can be. Both Bitcoin and XRP dropped aggressively. Panic started spreading across social media. Traders got liquidated left, right and center. And once again, we saw headlines suggesting the bull run might be over. And this is it. We're in a crypto winter. Was this just a normal crypto pullback? Or is this the start of something much worse? Because when you zoom out and really understand what just happened to both Bitcoin and XRP, the story becomes far more interesting than most people even realize. And don't worry, if you're new to crypto, I'm going to explain everything in plain English so you can follow along easily.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
So let's start with the facts. Over the last few days, both Bitcoin and XRP experienced a pretty brutal sell-off. Bitcoin dropped to a low of around 60,000 US dollars range, which is the lowest level that we've seen since late 2024, which is pre-Donald Trump. At the same time, XRP saw a sharp decline as well, falling all the way down to roughly around $1.11, which understandably has caused a lot of concern across the XRP community. Now here's where it gets interesting. Neither asset stayed down there for very long. Bitcoin has bounced back to roughly the mid-60s range, and XRP has already clawed its way back to 135 as the time when we record this video. Give or take, depending on the market movement, while you're watching this, it might slightly be different. And this right here shows us something very important. Buyers are still stepping in when prices drop. And that tells us demand still exists at the lower levels. One of the biggest misunderstandings beginners have is thinking that prices should only ever move upwards if long term it's going to go upwards. This is not how markets work. In fact, strong bull markets need big, aggressive pullbacks. Pullbacks serve several important purposes. They remove traders using too much leverage. They allow big investors to buy back at better prices. They reset hype and unrealistic expectations, and they build stronger long-term price structure. Think of markets like climbing a mountain. You cannot sprint straight to the top without stopping to catch your breath. Crypto markets behave exactly the same way. And what we've just experienced looks very much like one of those cooling off phases to me. Yes, I know it's brutal, but in the grand scheme of things, it's not so bad. Now, this is the part that is massively important, and it played a huge role in the drop we've just seen, and it's liquidations. If you're new to trading, let me explain this in super simple terms. When traders use leverage, they are basically borrowing money from the exchange to make bigger trades than their actual account balance would normally allow. That increases profit potential, but it also massively increases risk. If the market moves too far against their position, the exchange automatically closes their trade to stop them losing more money than they actually have. That forced closure is called a liquidation. Now here's where things get dangerous. When lots of traders are using leverage in the same direction, you can get a domino effect. Price drops triggers liquidations, which causes forced selling, which drops price further, which triggers even more liquidations. And suddenly, you've got these sharp, violent drops just like what we've just witnessed with both Bitcoin and XRP. Crypto does not exist in isolation anymore. Years ago, crypto moved much more independently. Today, it is heavily influenced by global financial markets. Recently, stock markets, especially technology stocks, have been under pressure. Investors are concerned about economic growth, company spending, and future market stability. And when large institutional investors become nervous, they tend to reduce risk across their entire portfolio. Crypto is still considered high-risk asset. So when stocks drop, crypto often drops as well. This isn't necessarily a bad thing though. It actually shows crypto is now fully connected to the global financial system, which is a sign of maturity for the industry. Institutional money has been flooded into crypto over the last few years, and long term, that is incredibly bullish. Institutional investment brings massive liquidity, regulatory legitimacy, long-term capital, and global adoption. But there is a trade-off. Institutions move enormous amounts of money. When they decide to rebalance or reduce exposure, those moves can create very sharp price swings. So while institutional adoption is fantastic for long-term growth, it can increase short-term volatility. Now, I want to show you something that really puts the entire market situation into perspective. Today, the crypto fear and greed index is sitting at 5. And I'm not exaggerating when I say this, that is insanely low. This is what we call extreme fear. Let me explain what this means, especially if you're newer to crypto. The Fear and Greed Index measures overall market emotion, looks at volatility, trading volume, social media sentiment, and market momentum to give a score between 0 and 100. 0 means maximum fear, and 100 means maximum greed. Right now, we're sitting at 5. To give you context, most markets operate somewhere between 30 and 70. Even during normal pullbacks, you might see the index dropped into the 20s. But single digits, this is sheer panic territory. That means traders are scared, social media is negative, confidence is low, and people are expecting the markets to continue to fall. And historically, this is where things get really interesting. Because if you go back through the crypto history, some of the biggest long-term buying opportunities have happened when fear was at extreme levels. Now, this is very important. Extreme fear does not mean the market instantly pumps tomorrow. It simply tells us that emotionally, the crowd is extremely pessimistic. And markets tend to move opposite to the crowd emotion more often than people realise. When everyone is greedy, markets often correct. When everybody is terrified, markets often start forming bottoms. Again, this isn't a guarantee of anything, but sentiment this low tells us one thing very clearly. Right now, confidence is broken across the market. And historically, broken confidence has often been where patient investors start paying very close attention. I'm going to tell you what I'm doing. I think it's worth sharing. I have activated my DCA on Bitcoin again. We are now in deep fear territory. In fact, we're in deep extreme fear territory. So now I am on daily Bitcoin purchases. I'm already on daily XRP purchases through the entirety of this extreme fear zone. And I will leave this on now until we're out of this zone, until we're back into the normal range. Then I will switch it off and then do nothing. This is the question everybody is asking right now. Is this just a normal bull market correction or something more serious? And the honest answer is nobody can predict the markets with certainty. But what we can do is look at historical behavior. Now, here's something really important that many people might not realize. From peak to recent lows, we have now seen roughly a 50% pullback across Bitcoin. And historically speaking, a 50% correction is considered very deep for Bitcoin. In fact, moves of that size are often more commonly associated with bear market style corrections or very aggressive late cycle shakeouts designed to flush out weak hands and excessive leverage. But, and this part is crucial, crypto has a long history of delivering brutal pullbacks even during overall bullish cycles. If you go back through previous market cycles, Bitcoin has experienced multiple corrections between 30 and 50% and still gone on to reach new all-time highs afterwards. Crypto is simply a more volatile asset class than traditional markets. So while a 50% drawdown sounds dramatic and probably feels dramatic, historically, it does not automatically confirm the start of a long-term bear market for the years. What it does tell us, though, is this. The market has gone through a major reset. Over-leveraged positions have been cleared out. Market sentiment has shifted heavily towards fear. And we are now sitting at a decision point in market structure. So when you combine the 50% market reset with fear and greed sitting at extreme panic levels, you start to understand why experienced investors are watching this moment very, very closely. Now let's talk specifically about XRP because it behaves slightly differently to many other cryptocurrencies. XRP obviously still follows Bitcoin's overall market direction majority of the time. But when Bitcoin drops aggressively, XRP usually drops too, and often drops harder because altcoins carry higher volatility. But XRP also has its own unique drivers. Historically, XRP tends to perform strongest when regulatory clarity improves, institutional payment infrastructure expands, and global banking partnerships increase. And when Bitcoin stabilizes after volatility. Without getting overly technical, Bitcoin's low 60k region has already shown a strong buying interest. XRP bouncing from $1.11 back to the mid 130s range suggests buyers are defending that support zone very well. If both assets hold above those key levels, it strengthens the argument that this is consolidation rather than a reversal. Crypto moves fast, but building real wealth in crypto usually happens over long time frames. Short-term volatility feels dramatic, but long-term trends are always what truly matters to me. Every crypto cycle has included moments that felt terrifying while they were happening. Yet many of those moments became incredible opportunities in hindsight. Now let's talk about one of the biggest beginner mistakes. The most common mistake new traders make is emotional decision making. Buying during hype, selling during fear. Successful investors build strategies before the volatility happens. They decide where they are comfortable buying, where they are comfortable selling, and how much risk they are willing to take. And then they stick to the plan. If you zoom out, crypto adoption continues growing globally. Regulation is improving, institutional infrastructure is expanding, and blockchain technology continues to evolve. Those fundamentals have not changed because of one volatile section of the market. Now, this is not financial advice, but I always like to be transparent. During pullbacks like this, I personally watch market sentiment, liquidity zones, institutional behavior, and major support structure. There are realistically two main scenarios playing out here. Scenario one is Bitcoin and XRP stabilize and continue the long-term bullish trend over the years. Scenario two is macro pressure increases and crypto enters deeper consolidation before recovery. Both scenarios are normal within crypto cycles. And this is what I want to get over to most people that are new into crypto. What you're seeing now feels scary, but it's completely normal. Weeks like this separate emotional investors from educated investors. Volatility is not a flaw in crypto. Volatility is part of what creates opportunity. But those opportunities usually go to people who approach markets with patience, education, and realistic expectations. If you found this update helpful and want daily crypto breakdowns explained in simple language, make sure you subscribe to this channel. And if you want to trade alongside a community of normal crypto investors sharing charts, ideas, live discussions every single day of the week, check out the Crypto Wolfpack community. Because the strength of the wolf is in the pack. And as always, stay safe, stay smart. I'll see you on the next one. And if you could all do me a little favor before you go, down below on YouTube, there is a button. It's called like. Hit it. There's also another button. Some of you will see it. It's called hype. It's completely free to use. You can click that and it'll tell the algorithm this is a good video and it'll give it an algorithm hype. So hit that like button, hit that hype button, hit the subscribe button, and I'll see you on the next one. And remember, the strength of the wolf is in the pack.